could you please welcome to the stage, first of all, Neil Woodfront. Gregory. Take it away.
Thank you. Back in.
Keiran, you're back there.
You're back there as well. Thank you, Matt. Thank you, everyone. Good to see everyone out again. 3 years since we last did an event here. Yeah, some little pandemic got in the way, but it's out of the way now. Everything's back to normal. So I was saying earlier, I remember previous bear markets. We did an event in 2015, and during that long bear market, and I think 4 people turned up to one event. So I think there's a big sort of. It's kind of indicative, I think, of how things have moved on, and I think we moved on from the phase where, you know, is Bitcoin and crypto in general just still a fad, or are we past that? And although there may still be some significant work needs to be done, but I think people are generally accepting now that this is here to stay. But if I look back over the last 10 years, you know, we decided to get the meetups up and running this year, and we were discussing how we were going to what we were going to talk about, how we were going to present things. So I think, you know, at our core and in our hearts, we were all Bitcoin maxis, because there was only Bitcoin when we started back in 2012 anyway. It was a bit of Litecoin, but no one really thought very much of that at the time, and Namecoin maybe. And you know, what we've seen since, especially since the launch of Ethereum and everything else that's inspired, has been quite incredible. But for me, I was sort of thinking about this back end of last year and sort of looking back, and I just thought, yeah, there's been all this excitement and all this hype, and it's amazing. But for me, certain fundamental things, I think, haven't really progressed very much at all. And probably one of the most fundamental things for me from the very beginning, which was a known as going to be a challenge if this was going to get mass adoption and people could use Bitcoin and other crypto as if they were using currency that's stored in their bank accounts, is going to be key management and wallets. And as you know, Keiran, thank you for that question. It's exactly what we're going to lead on to now at the end. It's like, you know, how close are we to that mass adoption? Yes, you know, we've had a huge amount of adoption from, I guess, crypto natives, people that have really dived in to understand the technology and start getting comfortable with key management, whether it's using hardware wallets, whether it's using hybrid wallets online, etc. But for real sort of mom and pops and grandmom and grandpops to start using this, I still think there's some way off. So, you know, thrilled to have our guests along tonight, and I think they'll cover certain different bases from, you know, blockchain.com really focus on the retail market from the beginning. And since, you know, those early days, we've seen the rise of you know, more institutional interest and adoption, and they have very specific and different needs as well. And although I think there has definitely been progress made to meet these different markets, there's also questions about some of the new technologies that are coming along, recent upgrades on the Bitcoin protocol itself, some new concepts and ideas, some of which Nick and his team are working on, and see if we can move towards this sort of nirvana of fully streamlined a currency that has all the features that the everyday user would expect. So that's my brief little introduction, and I thought it was actually quite ironic we're here at blockchain.com, you know, sort of led on, can you be in your own bank, because I know that was always an early sort of mantra from within the Bitcoin community. It's like, we don't need banks, we can be our own bank, and I know that was a tagline that blockchain.com have used to deliver a product which successfully moves in that direction. But how far are we away from that really being sort of hitting that nail on the head? And yeah, I think at the very beginning that sort of conversation started when Ben Reeves, blockchain.com's young British founder, and back in 2011 or 2012 I think he started out, and he was collaborating with Brian Armstrong, who went on to form Coinbase, or found Coinbase, and they had a distinct different of opinion about where this market needed to go at that time. It's like, well, you know, it was the approach that Ben was taking that, yes, wallets need to be more usable than just being living locally on your hard drive. So to create a hybrid web version of that model, or, you know, Brian's assumption was that the market at scale wasn't necessarily going to be able to adopt that, and they'd need a full custodial service that they're possibly used to in the traditional world. So here we are to sort of lead into that conversation. So if I may, if each of you could maybe, we've heard about an update on the product from blockchain.com, so we know where we're at with that. We will come back to you actually, because I just want to see, maybe dig deeper into some of the lessons you guys have learned over the years. But Suzanne, maybe we can start with you. Suzanne Hubble, CLO at Institutional Custodian Service, Keiran.
I was going to say, that's not normally the bit people stumble over, yeah. Sorry.
If you can just introduce Keiran and tell the audience about what you're doing, what you're working on.
Yeah, so look, Keiran is a true institutional custodian, built by institutions for institutions. That's our tagline, and you can very much tell which end of the spectrum we're going to land on in some of these conversations. Set up as a joint venture between Coinscrum, crypto native asset manager, Nomura, big banks, all direction of travel and leisure, wallet provider. Between them, they saw the need for a regulated custodial solution for institutions. Recognised that individually none of them were suited to do that, put those together to be able to deliver against that objective. Big believer in regulated custody. My background is very much TradFi. I've been with the company 18 months now. Spent a lot of time in traditional finance looking at market infrastructure, processes, etc. So you will find a very strong process bias in a lot of what I'm going to talk to you about, but really for me a lot of the interest here is how can the technology improve? How can it improve processes? How can it bring more efficiencies? How do we put the right things together in the right way? How do we learn the lessons and put together solutions that actually work, but work better?
Thank you, Susan. Nick, can you talk about you guys working on Commerceblock?
Yes, I work for Commerceblock. We're more well known for building a wallet called Mercury wallet, which is a big Bitcoin layer 2 wallet. For us, being your own bank isn't simply about managing your own keys, it's about running your own node, having no third-party dependencies, being miles away from anything like KYC and AML. Sorry. I am actually from a traditional background, worked for banks for 15 years. Never thought KYC and AML actually does any good outside of making compliance richer, or KYC and AML lawyers more expensive and make more money. The people who tend to use our wallet want to avoid the cops or whatever. If I was a cop, I would want to ban KYC and AML because I actually don't think it works, and I think that's a big thing. But yeah, we build a layer 2 wallet, self-custody, fully hosted. So you download our wallet. Our primary technology is Statechains, but also we run our own local Lightning node. So you don't have to integrate with any third-party node, any third-party software, from checking your hardware, from checking the block explorer. It's all self-contained. I think that's gotten a lot better. Up until a few years ago, I'd say only people like me could run their own node, but now you have things like Umbrella, Startmine, where you can literally double-click on a website, on your machine, run your own node, run your own explorer, run your Lightning node, and not need any third-party software. And that's where we should be going.
Thank you. And Neil?
Cool. I've been around the industry for almost 10 years now. Started at OKCoin, but more recently and most relevant to today's discussion, previously I was at Blockstream. Blockstream provide a Bitcoin wallet called Blockstream Green. I still maintain that's probably the easiest way for anybody to start using multi-sig themselves on their own. It's a really great wallet. But then recently I joined Unchained, well not recently, 2 years now. I've been working at Unchained Capital. A lot of people confuse us for a fund because we have the capital in the name, not at all. We're a collaborative custody provider primarily, so we help people set up multi-sig wallets, super secure cold storage, and then we also offer financial services on top of that. So you can get a trading desk, loans, IRAs, and we have some other financial services coming soon. Unfortunately, all the financial services, the US are only at the moment, so nobody in the UK can get access to them. But if you are a British user, you can still use our vaults. You can still get access to our concierge service that helps you set up the vault. And I think the key thing that Unchained cracked was that multi-sig, generally everybody's very apprehensive. They know it improves their security, but they just don't really know how to do it, and they don't dare. Even very experienced Bitcoiners don't. Whereas Unchained started providing a concierge service where you get a video call, you have somebody walk you through that process of setting it up, and then also you have somebody on hand all the time to help you if you run into any issues, do key checks and stuff like that. So yeah, that's a quick summary of Unchained's business.
Thank you all of you. So I think that probably everyone in this room, at most conferences you go to, crypto conferences, I think we're all guilty of maybe sort of living within a little bit of an echo chamber and mostly being quite tech savvy or not fearful of getting our hands dirty and trying to understand how these things work. And that's what I find, and the industry's grown and the interest in user adoption has grown massively. I think from the very beginning it was always, everyone was always told don't leave your money on an exchange because you can't trust them, and we were all guilty, especially in recent years, thinking that all the exchanges have moved way beyond that and we can trust them now, especially these huge ones that have had like hundreds of millions of investment from serious investors. Surely nothing can go wrong. So a little bit of a wake-up call on a few occasions last year, but that's still not the case, which is obviously unfortunate. So I think it's easy for us to all think, well, I think it's usable and it's not a big problem, but as I said, if this is really going to take off at scale, what is the user's perspective? So I'd be really interested from you guys, maybe start with you, Keiran. It's like, what response do you get from users? You must get feedback. You get people that just walk away and say this is too scary and difficult, or do you feel like you are pushing them in the right direction and holding their hand in the right balance?
So I think there's barriers to entry to crypto, and they're kind of usability barriers to entry. So things like seed phrases is a perfect example, but just like addresses as well, they all just kind of look kind of weird. They're kind of hard to, they're not memorable. Like I can definitely remember my bank account number and my sort code way more easily than I can remember my Ethereum address. So actually there is a space to slowly bring people into the crypto world without necessarily confronting them with those usability issues right now. I can also see that in the sort of like on-chain world, those usability issues are definitely starting to be looked at and improved. Like unstoppable domains now allow you to sort of like have Keiran.blockchain, for example, send me some money, instead of like my sort code and bank account, and that's way more useful.
Is that better though? I mean, you can make a typo squatting has always been a problem. I'm more likely to make a mistake typing Keiran in and sending you some cash than if I make a mistake in my Bitcoin address. It doesn't actually really matter.
Very true. I mean, you need a wallet that's going to verify this and so on and so forth, which we do. So yeah, but like these are sort of examples of the usability issues of the on-chain part. So I think there's a space for exchanges and for brokerage stuff. Just because, like, if you want mass adoption, you are going to have to slowly bring people across. I also think as the population just gets older and these young guys get used to grow up, it will also sort of naturally happen. But I also think there's just a huge amount of trust issues as well. So you look at bridging hacks, and frankly, most of this stuff is all about Ethereum networks and those types, not so much the Bitcoin stuff. But when you look at that type of thing, that's where I see resistance. And then when I joined blockchain.com, which would have been 2 years ago, I'd come from TradFi, so I was working at Wise. So I had a very, very strong product knowledge and product experience from there, and an understanding of what consumers really, really care about. And what they want is they want things which is cheap, fast, convenient, really easy to use. So you've got to make that happen, otherwise it won't get mass adoption. You just won't. So yeah, you have to solve those problems. And they actually, they were going to say. So when I said I was joining blockchain.com, a lot of people said, "I'm worried about the planet." The whole Bitcoin stuff around, that type of thing. So yeah, there's definitely a lot of fraud. There's definitely a lot of that stuff out there, and I think it's stuff that needs to be addressed.
And how often do you want to numbers or anything? But I mean, how common is it for companies such as yours to be getting emails saying, I've lost it, how do I get it?
I mean, all the time, consistently. The bot password issues happen in the thousands per month.
And just we'll move on to the newer stuff, because getting all the right nowadays and multi-sig, etc. And ideas such as social recovery. I mean, principle seems like quite a sort of no-brainer, and that's been spoken about as a concept for years. It's you see a couple of firms such as blockchain.com and similar like web-based wallets and even exchanges being able to to manage.
I mean, I used Argent, which had that kind of social recovery thing built in. It's one of the newer ones that does that. The thing is that who do I trust, right? I have that problem myself. I don't mind give that to my 5-year-old daughter. So like in the TradFi world, in fact, generally in Web 2, right? You log in, and you only have to trust essentially a few entities you've got to obey, etc. So that's the kind of thing you need to get people. That's what you need to build on top of what's already there. I think, and so that's why it's talking about secrets sharing. It's like that way you don't have to trust a single entity. You can spread your trust around. That helps better. And you could use again shared custodian or someone using the same secret there.
We'll move on to you, Neil, perhaps as well, because I guess stepping up the run from kind of maybe much more retail focused to high net worths, maybe hedge funds or whales that are trading in large amounts and want to sort of get this balance. They've got serious sums that they're fearful of losing. What are you seeing in terms of demand and feedback from your users? And what's their sort of level of understanding now, maybe compared to a few years ago, if people come in?
Yeah, I kind of reject completely this idea that like Bitcoin UX is so bad that like we're not going to achieve mass adoption. Like the Bitcoin price is a lot higher than it was 10 years ago. Like adoption is going pretty damn fast at the moment. Like how much faster do we want it to go? Obviously there's lots of improvements that can be made, but like I just think of like applying for a mortgage. Everybody at some point in their life applies for a mortgage. It's a very, very complex process. Way more complex than like setting up some seed phrases and putting them in safe places. And everybody does it. Like there's mass adoption of mortgages right now. So like I think with Bitcoin we don't have to like over-optimize and worry about that stuff too much. Like there are solutions available now that can get people to secure their own coins and pay their own bank. With high net worth individuals and small businesses that we service, they tend to be just very worried, like I already mentioned, about setting up multi-sig themselves. They do know that like eliminating single points of failure will help them improve their security. And the people that we work with tend to be Bitcoin maxis, and they also like treat Bitcoin like savings rather than they're not much into speculation, they're not trading frequently, so they have slightly different needs to some other users out there. But they're looking for security, they're looking for help. And then also, like in terms of the social recovery, multi-sig can really help there. We're not the only company that does this. So I mean, you've got people like Casa and Nunchuk. I'll just talk from an Unchained perspective. So all of our vaults are 2 of 3. That means there's 3 keys, and you need two to sign to release a transaction. It means there's 6 pieces of information that you technically need to protect. So you've got a key, 3 keys, but then for each one of those 3 keys, you've got 3 backups. So there's 6 pieces of information there. That would be a lot for one person to have to secure themselves, but when you're working with a collaborative custodian like ourselves, we secure 2 of those things for you. So now you've only got 4 things to put in safe locations. And you can put one with like a friend or family member, one in a Bitcoin, in a bank safety deposit box. Like, because you've eliminated the single points of failure, you have a little bit of flexibility with where you can put these keys. I wouldn't put it with a 5-year-old daughter, but even if you have somebody that is like less experienced with Bitcoin, you can still comfortably put it at their house or something and not worry too much about what's going to happen there. And then the great thing about the 2 or 3 model is that so you've got 6 things to protect, but you're only protecting 4 of them. If you lose 3 of them, so you lose 2 seed phrases and 1 key, you've only got access to 1 key left. You can still work with your collaborative custodian to regain access. So you've got a lot of kind of redundancy there to make a lot of mistakes. Ideally, like nobody should ever be losing 3 items. Like really, really screw up if you've done that. I mean, it can happen. So we've only ever had 1 user in our entire history lose their access to everything, and there was like a series of crazy screw-ups, and they weren't upset with us, just recognized that, okay, I really messed up here. But like that's a pretty good record. We have a lot of clients, a lot of like people are talking about grandmothers and stuff like that. We have a lot of like grandmothers, boomers, like any kind of user like we've got, and they're all securing the Bitcoin pretty successfully. So I think multi-sig can really help. I talk about the Blockstream Green model as well, which I think is also pretty good for things like this. But I've talked a lot, so I'll have to hand over.
Thank you. A couple of uses then, just especially over the last few years from institutional adoption. Again, I recall historically and where the first few standalone custodians came along, you had Elliptic and Vault here in the UK, and there were very few others. There were only 3 or 4 at the time. And people were starting to look for these services, but it certainly wasn't a big enough market for them necessarily to really sort of build sustainable businesses back then. I think now the timing is right, the market is there. But I remember in those early days, I was working with one company and their servers were based in a disused or former nuclear bunker in Kent. And we were looking to create a system where we could sort of seamlessly move between cold storage and exchanges, try and replicate some of that separation and distinction of responsibilities you get in traditional markets. And we were literally testing it out, running up and down like 6 flights of stairs up and down to through this bunker and then back up so we could like broadcast the transaction. And we were like, this really isn't going to work at scale. So I think we've moved beyond there now. And one thing, and at the time we were saying like this whole purely vertical cold storage model, it has its place, but also there also needs to be some level of liquidity as well for people logging and trading. How do we get there? And so from that sort of vertical security model, we have seen in recent years go more horizontal with MPC. So that has sort of started to be more widely adopted, especially for that sort of, the people that are trading regularly and especially hedge funds that need that balance between security and liquidity. What have you seen in your time, and Keiran, and I'm sure understanding the market before that, what changes have you seen even over these last 2 years as institutions have genuinely become interested? What's their level of understanding? Do they even know what they want? And also, with that type of customer, they have heaps of regulation, again, they have to comply with, and checks and balances to be really be able to access funds. What does that world look like?
Changing every day. Look, I mean, as I say, I think just pick up on a couple of themes. Trust, absolutely key. But it's fundamentally understanding exactly what service they're getting, what can the custodian look after for them, how are they doing that. But also that certainty of outcomes. And I think that certainty of outcomes is something that's really been brought into light with the recent market scenarios. Do you actually understand? So, you talk a lot about protection of the keys, can you access it? But are they there? What rights have you got? Does somebody move them? Did you sign that T's and C's which says they can lend it out and you just don't know where they are? So that absolute clarity of, if I place my coins with you, what's happening? What's the security? What are the processes? What's the governance? What rights? What rights are there in different scenarios? And bringing all of that together into a cohesive whole is really where we see the focus there. And I think, the fun bit for us coming out to the recent discussions is counterparty risk is suddenly, people remember it. The markets, you look at any other product, the market goes through cycles. People are very, very, all markets, people I just want access, I want to trade, I want to make money. I'm not very focused on some of these risks. Suddenly that changes, everyone's like, oh, yeah, maybe this does matter. So, we've seen that move towards really understanding what does custody mean. I think I'm getting custody, am I? Have I got certainty of outcomes? Both in, a risk scenario, but also in a day-to-day market event. Can I get access to my assets as and when I want, whatever that scenario is? And I think, to the point around now, whether you like it or not, the reality is these are regulated businesses. They are managing money on behalf of clients. There are certain standards they have to meet. How do they meet those standards? How do they ensure that they're being met? Is there a service, I love the idea of the concierge service because it's very much what we're doing around institutions. It's like, we worry about all that. We make sure those assets are clean. We make sure when you're moving them on, you're not going to be creating problems. Your clients aren't going to be exposed to those problems. We give you that certainty all the way through the value chain, and I think that's really critical. And I think, increasingly what we're seeing is, as you said, you couldn't talk about the technology going vertical and horizontal. From a process perspective, you've very much seen verticals just getting bigger and bigger and bigger and bigger and bigger. What's an exchange? If you look at what an exchange does in any other product, it is not what happens in crypto. And those lines are being drawn the way they have in TradFi for very good reasons. Now, again, we can argue till the cows come home about regulation, what's good regulation, The reality is there's risk. You know, have the lines being drawn in a way that the risk is clear, it's understood, you know what risk you're facing, whether as an institution or as a personal user, and you understand those outcomes. If you can't answer those questions well, you really need to think about, are you comfortable taking that risk? Our role in this is to help the institutions understand that risk. Where we can mitigate it, we mitigate it, but we also make clear where we can't. But you know, provide that clarity and certainty and trust.